Today's video is sponsored by Figure Markets, the largest non-bank mortgage lender in the US with over $15 billion unlocked on their lending platform. They've just lowered rates on their Bitcoin and ETH-backed loans even more to 8.91%, which is 9.999% APR, improving their already industry-low fixed-rate 50% LTV loans. They keep building as well, having also just launched decentralized MPC custody, the only place to get that amongst the major loan providers, and removed interest deferral fees entirely. What is MPC decentralized custody, you might ask? Well, it's a Bitcoin or ETH on-chain wallet with multiple key shards to protect you from a single entity custody failure. You can always see your crypto ownership in a segregated wallet and verify your collateral hasn't moved. Whether you're funding a major purchase, like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit their app or click my link below to take out a Bitcoin-backed loan with Figure today. More people are paying attention to crypto right now than ever before, so it's important to get your information from the sources you trust. That's why I want to give a big thanks to Bitwise for sponsoring today's episode. Bitwise manages over $10 billion across more than 30 crypto strategies, and they've been doing this since 2017. But here's what really sets them apart. They give back too. Bitwise actually donates part of the profits from its Bitcoin and Ethereum investments to open source developers, the people building and maintaining the networks that we rely on. So when you work with Bitwise, you're not just getting professional crypto exposure, you're helping fund the future of crypto itself. Check them out at bitwiseinvestments.com or email james@bitwiseinvestments.com and tell them Raoul sent you. Thanks.
Hi, I'm Raoul Pal, and welcome to my show, The Journeyman, where I travel to that nexus of understanding between macro, crypto, and the exponential age of technology. As I've tried to explain and show you, this is one of the most incredible times to be alive. Literally, we have technologies that will change humanity. AI is a technology that will eventually replace us as the apex of intelligence on this planet. These are stupidly big concepts, but they're happening at exponential speed. And how it changes the economy and how we have to think through the rise of the robots. We're replacing knowledge workers and manual labor at the same time, and it's only just started. And you see, I love to have these conversations with people who really think about these things at depth. And one of our favorites is Jordi Visser. So Jordi and I share the macro background, both hedge fund guys. We both stumbled into this whole new world and have become obsessed by it in understanding what it means for all of us and how to create the opportunity sets. So let's sit down with Jordi and learn something new as ever.
Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Jordi, welcome back to Real Vision.
Hi, Raoul.
How are you, my friend?
I'm great. Enjoying the acceleration of AI and the boringness, the money market movements of Bitcoin. It's very exciting out there.
Yeah, so look, as ever, we've got no agenda what we're going to talk about, but we're going to talk about everything. So where do we want to start? Do you want to start about the macro? Do you want to start about technology? Where do you want to start?
I always love starting with the macro because I think we're leaving a world. So let's get the stuff that's in the rearview mirror and let's get into the stuff that's happening now and the stuff of the future.
Perfect. Let's do it. Perfect.
Okay, let's do it this way. I'll just give you kind of my my latest things that I'm writing about, which I think are the most important. So the Fed, let's say, pivots towards worrying about labor, and that happens in August at Jackson Hole. And you get all the cries from people that are worried about inflation and the cries from people that believe the Fed is making a policy mistake. And I think you and I are both, in this point of that eventually labor is going to be disrupted by exponential innovation. And I've written two pieces this week specifically on the fact that it's here, it's now. And as we leave 2025, the number one most important thing for people is this year was a transition year where inference started to accelerate in terms of token usage, which leads us into the next stage of artificial intelligence, which I've called stage 2, where stage 1 was where these machines and these bots went through undergrad and they've graduated. They have 160 IQ now. And that number is only going to continue to compound every month and as every release comes out. But that just means we're closer and closer to knowledge workers being disrupted. And knowledge workers make up a huge percentage of obviously the United States labor. And that's going to start in much bigger fold this year. And the problem is you've already seen Walmart. Now you've seen Amazon make the headlines. You've seen Accenture, 3 of the 4 biggest private employers in the country have all said we're not going to be hiring. We'll hire eventually, but they've openly said that they're not hiring. And I'll just bring this up because I highlighted this chart last week, which is if you have a long-term chart of earnings per share and you overlay it with 2 separate labor indicators, one just temp employees hired. Temps have been going down consistently now, really since 2022, exactly right around the point that ChatGPT got launched. And then secondly is just the JOLTS number, which obviously went up dramatically during COVID, but has come back down. But those 2 things were very, very much correlated almost exactly to earnings per share in the S&P. So we've entered that very dangerous point where, especially from the big companies like Amazon who are spending lots of money, they need to be reducing employees to stay competitive. And I think one of the mistakes people have made is that they actually believe, number one, AI is not going to do that. That's a mistake. Well, you and I both know that. Number 2, they kind of view it as, well, the companies are not going to fire the people. And the reality is in a capitalist world where your shareholders determine and your board determines what you're doing, you are absolutely going to see profit margins be the way that people are going to focus on. And I think we're at that inflection point right now where this labor situation, which has reached levels unprecedented, where you could have nominal GDP growing at 5% and no creation of jobs outside of healthcare, we're already seeing it. And I just don't think enough people that I'm speaking with recognize how quickly this has come on and how we're at the very beginning stages of something that goes exponential in terms of the labor side. And how do you catch up to exponential? So this is never going to get better on the labor side. It's only going to either stay the same or worsen. And I think that has huge implications. And that's what I've been writing about lately.
So does that mean that unemployment rises or we just stop employing people as GDP grows?
Well, see, this is an interesting question. This is the way I've been framing it for people lately, because you and I both know that, one of the charts that you highlight a lot is the labor force participation rate. Okay, well, the labor force participation rate I've redefined as the rate of people who need to work. Because you end up in a situation where there's 2 things that can make people not need to work. One is they're fully on transfer payments, which means they're getting money from the government. They're getting subsidies. They're getting the transfer payments, which have been built up in Social Security and everything else. Or they've made enough money because they've had enough money in stocks. But either way, it's a need to work thing. So you've had a lot of people leave the labor force. And I think the labor...
Or it's an age thing, right? If you're in your 80s, you're unemployable.
Yes. And I think to a degree, I'm including a lot of the older people in the side of receiving pensions or receiving something like that. But you're right. There's an inability to be in which the demographics keep worsening. And I know you guys highlight the demographic side. For me, the reason this is important is because even just since May, the labor participation rate, I think, is down 0.5. We'd be at a point where the unemployment rate would be closer to 5 right now if the labor force hadn't shrunk. And so the problem is, as the labor force participation rate goes down, we'd be closer to 8% unemployment if we didn't have it fall so much since the great financial crisis. And I think that's
also to do with immigration as well.
Well, immigration theoretically should be reducing the supply of labor. And this is kind of my big issue, is when people talk about the fact that immigration is becoming an issue for the hiring numbers, that's all well and good, but then why would the conference board differential be worsening so much, saying that the anxiety for workers is that they won't be able to get a job? So that doesn't match up with the surveys. And then people can say, well, that's Trump related. That's whatever. The reality is it's the hiring market has absolutely worsened. And that's why I bring up Accenture, I bring up Walmart, I bring up Amazon, because Amazon has the same amount of employees as it did in 2022. So they're about to reduce again. The issue is, if you look back at their employees and the growth they had from 2007 up until now, it was a linear line. I mean, it was literally like it just went up by nominal GDP every year, and now it's not growing anymore. So we've broken the connection where as GDP goes up, we don't need to hire any people. And you and I have talked about this before, but I think one of the big macro mistakes that's happened that has led to people not understanding why we don't have recessions anymore. Yes, the Fed has these liquidity facilities, but the other thing is we just saw 7 companies go from $1.5 trillion to 15 trillion, 16 trillion, 17 trillion, 18 trillion in market cap. And they took no debt to do that. That has never happened before in the history of mankind with capitalism. So you had a breakdown in those relationships of nominal GDP versus debt. Well, now you're having a breakdown in nominal GDP versus people. They both have to do with software, and they both have to do. Software was already doing this, Raoul, is really my point. We just didn't call it the same thing as what's happening with AI, because AI is a more dangerous thing.
Yeah, and it's hyperscaling.
Yes.
The speed of the acceleration of this. So what does that mean? Before we dig in more into the AI side, what does it mean for the economy? It puts the Fed reaction function towards cutting more? Or do they realize what the problem is? And it's like, well, this is not a stimulus-based thing. Is it a fiscal thing that ends up happening? What is the outcome of this? Because growth is not going to slow.
So unfortunately, if you go back to let's use the K-shaped economy, we know the bottom end of the K is very dependent on interest rates by definition. So whether it's commercial real estate, whether it's real estate itself, whether it's auto sales, or whether it's individuals, they depend on the fiat system, which is credit based. They need to borrow money to go through this, where the things on the top end, wealthy people, the Mag 7, they don't care about interest rates. In fact, the higher interest rates go, the more they benefit from it. So I think what it's done, and I think what has happened, is this still becomes a relationship between the dual mandate. And the reason that I think it makes sense for the Fed to be cutting is that everyone's fears about inflation were wrong. And there's just no other way to say it. I mean, the tariff numbers are as high as what people were worried about back in April, and yet we're not getting the inflation that everyone thought feeding through. And that's because, as you and I both know, I mean, AI is an incredibly deflationary force.
The most deflationary thing that could ever exist.
Yeah. So again, if you're going to hit labor, and wages on every metric have gone lower since the peak in 2021, 2022. I just don't see how they're going to be able to do anything other than cut rates. Now, the administration, and this is something that I don't hear people talk enough about, this White House is filled with AI people in it all the time. And you don't have to believe in everything about AI, meaning I'm not an AGI person, meaning I don't believe in the concept that there's this magical thing that just kicks in and there's one winner and everybody loses. I do believe in artificial and general intelligence. I do believe in it being deflationary, but they've put the boogeyman in both the White House. China is worried about it because from a military perspective, but honestly, Demis Hassabis does not want to rule the world. I mean, he seems like a really nice guy who just won the Nobel Prize. And when he talks about things, he talks about people living forever and him being able to be a part of that. I think Elon Musk cares about putting people on Mars. I don't think he's into making more trillions of dollars. They're not driven by this thing. I mean, they're gamers, they're nerds, they're people that are trying to do stuff. So I think when in the context of the way Wall Street looks at this stuff, they're still focused on the monetary policy side, where I think monetary and fiscal are going to be aligned, which is we have an inequality situation, which is only going to worsen. And the more deflationary it is, the worse the situation gets. And so I think their job is going to be to help people, especially when we go into a midterms. The one big beautiful bill was structured in a way that the ramp up of everything is going to happen as we get into the first half of next year, leading into that. So for everyone who's out there wondering what the economy is going to look like, the Fed's cutting rates, global central banks around the world have been cutting rates, and the PMI hasn't started to rise yet. And I think a lot of that had to do with the fears over China and the fears over the whole tariff situation. I think everything is going to go higher because of all the spending in CapEx, all the pent up stuff from the one big beautiful bill, and all the rate cuts, which we know is a leading indicator for all of the things that'll go higher. And so I don't think people are ready for a situation where the economy is going to be growing at the same time that rates are coming down.
Yeah, I get the same read of this. And the other thing is the ongoing refinancing of the debt means the ongoing liquidity. We're seeing China printing money. All of that whole game, the everything code game, is still at play. One of the things that's happening right now is the government shutdown, which means that the Treasury can't spend the Treasury General Account, which is actually the only straightforward liquidity mechanism they've got because they aren't using the balance sheet and the reverse repos drain. So the moment the government shutdown opens up, then liquidity starts pouring in. And then we've got the change to the SLR coming, and then the reserve requirements to banks next year. I mean, there's a shit ton of this stuff that's kind of orchestrated to allow liquidity to flow.
Yeah, and even though it won't be QE, the reality is QT is ending. The Fed's balance sheet is going to at minimum stay the same, but you're going to have less of the duration selling, more of the money in the front end. And again, I think it just, it's more liquidity. You don't have to call it QE, but it's like, okay, that money's going to get levered up. I mean, it's a fractional reserve banking system. It's going to get levered up. So,
and what impact, I'm trying to think this thing through, impact the government shutdown has. My guess is they won't re-employ all of the people that are furloughed. Yeah, and that is potentially a shock. And I think Scott Bessent certainly would like that because it forces the Fed to cut faster, which he needs because of the K-shaped economy.
Yeah, and I think that's where they're going to try to err on the side of the government employees, which, again, if people don't realize, I mean, you're talking about one of the largest employers in the country.
That was the growth in the jobs numbers.
Absolutely. And I mean, if people don't know it, I mean, you're talking as much as Amazon holds, the government has 20 times the size of Amazon. So it's like when you go through the numbers, guys, I mean, and that doesn't include the contractors and the people that are associated. That's just the pure government employees. So I think we all realize that there needs to be a lot of innovation in there. And I think the job situation, they're going to force it out of the public sector and into the private sector. And that's not a good game for job creation to be doing that and moving through it. And so again, I agree with you. I just don't think this is going to be an environment where job creation is going to happen. And without job creation, it's very difficult for me to get to the point that inflation is going to happen, and very difficult when the inequality is there, because at the end of the day, inflation has a component which is driven by the median voter and the median person in the economy. And that's when you get into this. The wealthy people don't spend more money because stocks are going up, or they don't go to the supermarket and buy more of goods. It's still a volume game. And if the average person can't afford their groceries the same way, it actually has a negative or deflationary, it offsets the thing. So the inequality to me is a very deflationary thing as well. And so I think it reinforces.
So that puts 2026 as a very strong year potentially for asset prices and economies, right? Because we've got kind of everything swimming in the same direction.
Yeah, I think the part that's been left out this year will participate next year. I've kind of called next year the year of things that people don't want to invest in, to be honest with you. So the Mag 7 to me, I view them as having trouble out over the next 3 to 5 years. I don't see them being in a good situation, just based on my own views around AI, and this all differs for people. But I think that a diffusion index like the PMI is really about, 60% of companies finally benefiting. Well, between rate cuts coming, that helps a lot of companies. Between obviously the margin benefits that are coming from the companies that have been investing in AI, they're going to do well. But the infrastructure build out is massive. And I will tell you, Raoul, I am shocked every day as someone who spends their entire life writing about artificial intelligence, but also in just simplifying it. And I always start with Nvidia, and I just start with the amount of power and gigawatts that we need. And it's a very simple equation. How anyone can be negative unless there's inflation. And I'm going to say that. And I don't think without oil prices going sharply higher, which is not part of this, that you can have a inflation environment where wages are under control because we have a weak labor market and where oil's not going sharply higher. Without those two dynamics, even if electricity prices start to go higher, I think the hyperscalers are going to be forced to pay for it. I just see this as the Mag 7 are not the winners, except for Nvidia and Tesla. I'm very bullish on both of those. I just think the rest of them, the spenders, as I call them, are going to have a hard time, and maybe Apple, but definitely the spenders are going to have a hard time.
We'll come on to energy in a sec, but just finishing on the macro side. So there's a lot of people think like the end of the cycle, whether it's the crypto cycle, the business cycle, whatever, is this year, because normally it's 4 years. From what you look at, what I look at, that doesn't seem to be the case. We haven't even picked up, so we haven't had a cycle yet. So we've got this kind of stretched out kind of, the K side of it has been very long and grinding, while the top side of the K is obviously rocketed with liquidity and financial conditions.
Raoul, so I've spent a lot of time, because as I got, and I was telling Nico before we got on here that, my first event for crypto was at your event in Miami this year. And I got to meet a lot of people. I got to learn a lot about, kind of what had happened. Now, those were traders. Over the course of this year, I've been more involved with meeting people, let's say that lost a lot of money in 2021 and 2022, that were on the investor side. I think one of the things that we all have to understand with inside the space is that 2022 really was a much more important event than we all realize, in terms of it causing a bear market without actually seeing it. Like, as far as I'm concerned, the K-shaped economy, that stuff on the bottom, it was really hurt badly by a bubble that happened in 21 and 22. And there's no way to put it. It was a bubble. And it was a bubble for VCs spending money on SaaS companies and on crypto. And I don't think we appreciate how when AI came in late 2022, that was also an incredibly disruptive force. And the reason it was disruptive, and how crypto and the VC world are aligned, if SaaS, those investments in SaaS don't come back, then they have a lot of money trapped in crypto already and in SaaS. And I believe that this has been an overhang that reminds me a lot coming out of the dot-com bubble, which took a long time to get out. And this overhang that's felt shows up in supply. What Bitcoin's going through at this point this year, we saw on Ethereum earlier in the year. We saw on Solana. There was just a lot of supply that had to have been investors and people that own businesses and things that still needed to liquidate in something. And only now do I think, between the PMIs and the Fed cutting rates, that we're actually going to see that go up. I think on the crypto side, we're getting through the supply. And I've spent a lot of time. I heard your interview with Novo, whether it was last week or the week before. And I listened to a lot of the things he said. I actually quoted them a couple times in the past week, because he talked about the selling that was happening and how they had.
Yeah, I mean, he sold for one OG. What was it? $14 billion.
Yeah, I think it was 9. What he said,
9 billion. Yeah, whatever. Yeah, huge number.
It was a huge number, and then subsequently, I've heard more and more. And I've heard from most people, and you and I spend our time as macro people, like, who's selling? Where's this coming from? And the reports have been that all of it's been coming from Asia. It hasn't been, it's been mainly from Asia. I've heard China a lot of times, but regardless of where it's from, I also think there's another element of AI that has disrupted at least part of this, and people don't spend enough time. I spent a lot of time on the Bitcoin miners and understanding the relevance they have. They are overwriters constantly. They need to hedge out their supply, or what they hold, to deal with their earnings. But also in China, you've had a lot of stories going around this year about banning on more mining and cracking down on people. And this is, I know it happened in 2021, but there's been a lot more stories and a lot more reports. And I know from my own investigation in this, that this year has been a very scary time for global central banks in terms of what Trump and the administration is doing with stablecoins. And everyone's worried about, is the U.S. now creating a digital economy which is going to be backed by the dollar, and this is going to be this whole thing. So I think there's been a lot of things with artificial intelligence and with crypto this year which have been disruptive. I think the overhang has been there. And I think most importantly for everyone out there, you've been able to make money in things like Nvidia and Micron and Chinese stocks and energy stocks and all kinds of semis where you can get 3, 4, 5 baggers, 6 baggers, quantum stocks. Retail's had other places to play this year. And so if crypto's not working, they're really smart. Like, okay, I'll wait till it comes back. When it's easy money again, I'll come back in. So I think that is typical of coming out of a bear market. I think that's typical of wait till we get back into it. And I see it broadening out next year. So I do believe the 4-year cycle myth, which does match up with the S&P and NASDAQ going down, I think that is ridiculous with rates being cut, earnings accelerating, and the build out of CapEx, which is going to be $5 trillion to get to 100 gigawatts by 2030. Unless you're going to bet against that, which a lot of people seem to be hoping is not going to happen, it's going to happen, and that's going to keep the earnings growing.
Yeah, I mean, how I frame this is, look, there is a cycle, a business cycle. Like, I mean, you got me to that point where I too don't believe there's recessions. I don't think they're possible, which is still very contentious to most people. But there's a lot of thought behind that. That's not just a statement, plucked from thin air. And so we do get some liquidity slowdown, business cycle slowdown, and that happens in, let's say, 27 mainly, whenever it is, end of 26, 27. The next cycle, I don't think the drawdowns will be big. It's like 2012, 2013. Your kind of NASDAQ fell like 20% or so, went sideways for 6 months and then took off like a fucking rocket ship.
Yep.
That's what I fear is about to happen. They were about to go into a full, spectacular, beautiful bubble. But next time around, into 2030 is going to be something quite spectacular.
Yeah, I'm on the same page, although I have one eye open. So I've spent a lot of time trying to figure out in my mind when we get to the point where humanoids are real. And when I mean real, I mean where it's a foregone conclusion that 5 years from now, there's going to be millions of them out there. Abundance is a very scary thing to me. And I've had to come to terms with what it actually means. And for me, because it's very bad for labor, it's very bad for politics and society. And how do you get through this whole identity breaking thing, which I'm sure you've either thought about or you've had people on which have talked about it. And I've kind of come to the conclusion that when people say, well, there has to be a form of UBI, I actually think, and I don't know who said this first, but someone, when I was really doing my research on Bitcoin, said Bitcoin's all about time. You have to understand you're getting your time back. You know what's interesting about that is everything in the fiat system takes time. It's all about borrowing money for 20 years out. Well, if every day moves what used to be a year, then you're not borrowing money for the future because the future is completely unpredictable. So it doesn't happen. So eventually what goes on is the entire leverage in the fiat system has to come down. It has to. If the money's moving into stablecoins, what's replacing, and this is going to get into something which I'm sure you've had charts of before, but remember how back in the early 2000s, we would look at the money velocity chart and you had to get money velocity up.
Yeah.
Well, with AI agents, you know what's going to happen? The velocity of money is going to go through the roof.
Same with stablecoins. Those two combined, a velocity.
That's what I mean, is that the AI agents will be trading stablecoins so fast. The other engine, the other fiat system, the one that has cycles, and the reason so people get, I don't think there's recessions, is because I believe the economy is now 70% the digital economy, 30% the fiat in terms of growth rates, but the size of the fiat system is still much bigger than the digital one. And so the cycle still exists in the fiat system. We're seeing that with commercial real estate. We're seeing it just doesn't matter as much because it's not as important as it used to be.
And because those digital companies don't have debt, so they can't blow up. I mean, that's point number one. That's the most important thing.
And that's why corporate interest payments collapsed when rates went higher. And I remember showing that chart to people going, do you understand this is exactly it? It's because the Mag 7 are loaded with cash and all the people that have debt don't equal the size of the cash these people have. Like, you're watching this stealing sound going into these companies. It's not that complex. So I've kind of come to the conclusion that by 2030, I do think the stock market valuation will change. And the reason it will is because theoretically, like, I'll use Nvidia as an example. So you probably, I'll give you some numbers. So the current forecast for revenues for Nvidia, for sell side, the average is about $425 billion for 2030. They're currently just over 200. Okay. So let's assume it's 225. So they're going to double. The problem is we know there's going to be 100 gigawatts minimum that needs to be built out globally. So if you do the numbers and it's 50 billion a gigawatt, that's $5 trillion of capex. And we need this stuff. Now that's using today's prices, so no inflation. So let's leave it exactly the same. And right now Nvidia has a complete dominance on the data center side. That's for data centers. So you can go do the math. Out of the 50 billion, about 40% on the low end is for the compute, and the rest of it is the power and the concrete and the stuff like that, with power being the majority of it. So when you do the math, they've put in almost a 0% chance that Nvidia is going to keep their market share or that the capex is going to happen. It's like a 10, 15% in my probabilistic. That's why until that number gets to the point that it's actually high, then consensus on the AI build out is just very low. People don't believe in it.
Well, because you can hear it in everybody's voice.
Exactly.
There's a bubble in calling for an AI bubble.
Yes. And you're hearing it in the people we know and we talk to, the people with money. The more money you have, the more you doubt it because you've been through this before and this looks like a bubble. But if you don't have money and you're just trading all day, you're making money on it. Like you're like, all right, my number one input is it's called momentum. And then I go on X and everyone says I buy nuclear, I buy quantum, I buy this, and that's all I do. So you don't have to go do your research. You don't have to go through it. And as long as that's happening, retail is dominating this. So as long as Nvidia's probability is low, then I think this stuff will go higher. The bubble will occur when Wall Street starts to price Nvidia at a level where they've built it in.
The cynics suddenly realize that this is the end game, right?
Yes.
It's like the greatest invention humanity will ever create.
Yes.
People don't realize that yet, so they're cynical about it.
Yep.
But once they get there, the amount of money is going to get thrown into this. And then after that, I don't know anymore because we've then got AGI or whatever trading the markets. How do you price markets? Maybe markets go sideways for 20. I have no clue.
Yeah.
But I just see that strength. It's so obvious to me. Sure, we'll get a slowdown and a correction period for a bit, but then after that, everybody's going to have to throw their money into this because there's no other choice.
What would speed the process up is if computers were managing the majority of the money. So they would take Nvidia up because the probabilities, it makes no logical sense. But there's two forces. There's Wall Street and then there's passive investors who are doing nothing. And so there's a lot of money that isn't actively managed. And then for the stuff that is actively managed by humans, they don't agree with it because they've been through this before. And as I've been using the Charlie Munger quote, show me your incentive, I'll show you the outcome. There's no incentive for wealthy people to bet on AI because they've already made money. And the outcome is if they're wrong, they don't want to be wrong. I've learned that only through, why don't you like Bitcoin? And I've been to enough dinners now. I don't know how you handled it for so many years. Why don't you buy it? I can't deal with, there's always one of them at the table. I was at a Russell Napier dinner recently and there was one guy at the table. I'm like, are you kidding me? Now I have to do the Bitcoin thing. So I just kind of shut down and I laid low. But Tesla's the same thing.
Oh, yeah.
At least Tesla, there's a human being and he's built 4 other companies that are massive and done all these things and he wants to go to Mars. But Bitcoin and Tesla are the exact same thing. No one believes in them. So,
if you've ever wished you could ask me a question, any question, 24/7, well, now you can. The Raoul Pal bot is my AI assistant trained on all of my insights, macro research, macro views, even wine and travel knowledge. The Raoul bot is available for everybody who subscribes to either Connect, Alpha or Pro. It can really change your life. You get me as your mentor 24/7. The link's in the description. I think you're going to love it. It's bizarre. So when I'm also looking at this, the energy side has got my attention, and I think there's a layup trade. When you break down the urgency by which we need the energy, that rules out nuclear now. Of course, the investment comes and it takes 7, 8, 10 years before it rolls out. Sure. But by thinking that nuclear is the answer right now, it's not. The need is so urgent and so pressing because this is not just the margins for the hyperscalers. This is the humanity scale technology that is the game of nations now, right? Yep. There is no way you can lose. Zero. And the US government is showing it by buying fucking stakes in companies.
Exactly.
This is the size of this, right? This is the most important thing.
We are China now. We are buying companies, privatizing.
Because there is no choice, right? This is the most important thing we will ever go through. And so energy, so it's like, okay, fine. Oil's not going to be part of the equation. It's just too slow to build anything. The existing infrastructure of the electricity grid is too crappy. We cannot rebuild it at national scale.
Yep.
So it's going to have to be a decentralized grid, and it has to happen quickly. And the only answer in the world is solar. And then you add a bit of gas power plants for the load balancing, because they take about 2 years, and gas is abundant, super cheap. You can't get the price of gas up if you tried, because there's like infinite supply of this bloody stuff. So I'm like, and then I look at the TAN ETF, and it's like down 90%. I'm like, because everyone's so cynical from getting burnt in a excess capacity cycle last time around. I'm like, I know these trades. I love these trades. These are the Lindy effect trades. He's like, is solar going away? No. Look what China's done. They've added more solar capacity in China than all of the world's total solar capacity in 1 year. And it's like, I think they know the game here.
Yeah.
So what is your thoughts on the whole energy thing?
So until this is another place where I wanted to make sure I understood the complexity. So on the gas side, theoretically, if they could, they would try to do all gas because it's quicker and because it doesn't take as much land. So the problem with solar is obviously these are big, gigantic fields.
Yeah, but not that big.
Well, for the US to get to the gigawatts that are necessary, which is a big build out, like in the case of Nevada where they're building this big one, they've had to stop it and move it around. And so even though they're not that big in terms of we could do it, they definitely take a shorter amount of time to put together than building out, obviously, a plant. But in terms of if you could, gas turbines, if they were all available right now and you could get them all, they'd be doing gas turbines and everything because we have available gas. It's just, do we have it near places? And I think they'd figure.
Yeah, do we have pipelines?
Exactly.
Because people forget that. You've got to pipe the damn stuff.
Exactly.
So
So
that becomes very politically difficult because you've got to get it through California and they don't want it. And they have to get it through, wherever.
yeah. And that's the thing I think with solar is the one big beautiful bill got people thinking that they don't want solar. The reality is, like you said, it's a race. We have to get it done. And when you realize the shortage we have in transformers and in gas turbines, you have no choice but to go another route. And the solar route is going to be part of it. The battery route is going to be part of it. When you start getting lithium investments, that's them pretty much admitting that, okay, we need batteries. And it's not just for drones and it's not just for humanoids and defense weapons. It's also for, okay, there's a reason why Elon Musk, when he built Colossus, he's got his big battery packs. There's a reason why his battery part of his side is growing. This also brings the Bitcoin miners in because of the grid optimization, because what the Bitcoin miners are able to do, and this has been something that I learned more about this year, and this is actually an important thing for people to hear because I do think it'll bring the traditional finance world. Every day there's a new way for them to invest in crypto. You obviously had the Circle IPO. So stablecoins have finally, people didn't even hear of stablecoins a year
That's
ago.
another
So
one I need to talk to you about. I'm sorry, I keep writing notes of things I need to talk to you about.
So that got in there. But the Bitcoin miners are another place. And the reason is because they're directly connected to AI. They've built out these data centers. They have this equipment. And in the case of Texas, they have 4 gigawatts of the 80, I think it's about 85 to 88. So it's a sizable portion. Now, the value that they bring to the ERCOT to Texas is the fact that if you have solar, obviously at nighttime, they're not producing anything. So what is important is that the prices, even during the lower times, are higher during the off times. And this is what the Bitcoin miners do because they're arbitragers. So they do things when the price is really low. So it's kind of like having a restaurant where you're closed at night. Well, if you could have orders at night when the tables are empty, then your business is more profitable. So what the Bitcoin miners do is they act as virtual batteries. And so if ERCOT's having a problem like it had in 2022 and pipes are freezing and the electrical prices are going through the roof, then they can call the Bitcoin miners and they won't mine anymore. And so the miners have become important. And the reason that is in there is that more and more people are looking at grid optimization, no matter where they are. And this was a big negative because Bitcoin miners were negative on the ESG side. In fact, everyone, when I got into the Bitcoin side, is like, oh my God, this is so inefficient. And so everyone is starting to connect. So I do think when you go through the power side, people have to look at so many places across the power side. We're going to be using batteries. We're going to be using solar, we're going to be using boilers, we're going to be using generators, we're going to be using everything because, like you said, it's a necessity. And the gas turbine shortage, of which there's, I think, four or five companies that make gas turbines of any kind of size in the world. If there's a shortage there, that's five companies that are not supplying the power. They're holding things up. And so a small boiler company, a small battery company, nuclear like investments. This is kind of the PMI thing. Those dollars start kind of moving around into other places, and solar is definitely going to be one of them. For sure.
And you just see the scale of which China's doing it and the signal in that. They're not going to destroy capital for the sake of it. There's a race to get energy. The energy thing is also misunderstood by people. People say, well, solar's rubbish because as soon as the sun goes down, you got 4 hours of battery life, then it's all over, it's shit. Okay, what I say is, okay, grid can supply this much electricity. If you try and plug the hyperscalers into the grid is finished, right? Electricity prices go to the moon, it doesn't work.
Yep.
So you take as much off grid as possible, so they're only calling for 25% of their needs on grid. I mean, that's how it works. But people just look at everything in isolation because for some bizarre reason, solar is politicized. And they're like, solar bad, oil good. I'm like, fuck, it's just energy. And the entire game the world is in is intelligence per unit of energy. That's the game we're in now. The whole world is in one game.
Yeah, one of the things, you said an important point there, and I think people have to, they have to recognize that as of now, what the hyperscalers have effectively used was excess capacity on the grid.
Yeah.
If we have a recession, which we have outside of the hyperscalers, they were just using what would have been used by,
manufacturers.
If the commercial buildings are empty, then they're not using them. If you can't have the nominal GDP slow down outside of digital and not have electricity usage go down. So where the electricity usage is going up is geared towards the LLMs and towards training them. So once you get, and I think next year is the forecast that most people have, where we will then be at full capacity, that's where the build out becomes critical. So I think one of the reasons that this hasn't been, violent, when you go to 3 Mile Island, when you go make all these deals, when Elon Musk imports basically a gas plant from overseas, it's because he can't get through things here. And whether it's the state regulations, which have become an issue, or other things, I think people will have to recognize that when you go through excess capacity, again, you start to get the PMIs go higher. PMIs at the end of the day are about a diffusion index. And if you have excess capacity and you're not running, at a full throttle situation, it becomes an issue. And I think that's where we're going to be at. The other thing on batteries, just so people know, I'm spending a lot more time on the edge problem. The reason I brought up the humanoids is kind of the level where I think the stock market, when people jump into humanoids, because right now most investors are like, it doesn't matter. I'm like, no, it's starting next year. And this is my hot take for here. The first humanoids in full development will definitely happen next year. It's the Tesla Robo taxi, which is really humanoids on wheels. And that will open up people to do the homework. And the reason that's so important is because we're going to start getting into the brain being in the devices, the edge devices. So everyone has to realize that.
Elon's even talked about using all of the yesterday, which is something, I don't know, maybe you and I have talked about in the past, that they've all got latent computing in all of these cars.
Yeah.
There's millions of these damn things. You just need to connect them, which he happens to own the network. Oh, what a surprise.
Well, this is the reason why you probably last week, or 2 weeks ago, Andre Karpathy, had a podcast come out with Dwarkesh Patel.
Yeah.
And I got a bunch of things sent to me going, oh, this must mean he's saying no AGI till 2035. I guess we have a bubble right now. I'm like, okay, first of all, it's kind of like the recession thing. It depends on how you define it. We're actually in a recession right now in many parts of the economy. He's saying AGI is when the computers in the brain are interacting with the world like a human, which I happen to agree with. If you ask me what is not AGI, it's when a computer can do a bunch of knowledge work, but that's it. It needs to interact.
Yeah, well, I don't even know, because if we'd gone back 3 years and said where we are today, we would say, yeah, that's AGI.
Oh, yeah.
We've got agents acting autonomously. Sure. We've got memory, but we just keep moving AGI because when we have AGI, we're declaring ourselves not the apex species. Nobody's going to declare it because nobody wants to. But that's the fact, is the moment we announce it, we have replaced ourselves with a new apex species, which has never happened to all of humanity.
Correct. Correct. And again, the robo taxis can already drive better than humans.
Yes.
I do believe that the interaction between a humanoid and human beings, it's not there yet. I mean, they can do stuff. They'll be in mines, they'll be in factories, they'll be in all of this stuff. But before they go into a house with kids, they actually need to improve a lot. And that was his point. And whether or not it happens, in the future or not, but the reality is we will be sticking these brains inside these devices that don't have time to wait for the latency to go to the cloud and come back down. And that's the whole point of we're entering a different stage. And for batteries and power, it has huge implications. There's also the semi side where it was one semiconductor that was benefiting from the data center build out. And the reason I use Nvidia, so Nvidia is the data center side. It's the oil. It's whatever you want to do of this thing. But now you're getting into every semiconductor going higher, like Micron and SK Hynix, and extending into the smaller ones. And the reason is because when you make brains inside an edge device, that is different than a data center. They need different packaging. They need all this stuff to happen. And so I think that's going to be the next phase of AI, is that brain part and the battery part.
Yeah, I totally agree. And Elon's made this clear as well. It's like, what the hell do you think my satellites are?
Exactly.
Because they're just a bit of solar and a computer.
Yep.
If this is not telling you that, then nothing is. That's another thing about the electricity thing. You made a good point that I had not thought of. And I think there's going to be a lot of signal in what you said, is who's going to pay for the increase in electricity if it's caused by the hyperscalers? It's going to be the hyperscalers.
Absolutely.
Right? We have to tax them in a way to replace the economic rent that they take out of the system and give it back to people in some way, because if not, the system does not work. If the machines make all the money, how do the people, we've talked about this a lot, but that feels like it's a really obvious place to start.
Yeah, and that starts to get into this point that I was making about, so if you get to abundance and the robots are making all the money, theoretically, so if they're making all the money, then that means the government's making the money because the government owns the robots and blah, blah, blah. And so the money gets equally distributed. The profits, so it's the country becomes profit sharing, meaning, okay, everyone has a share in the economy and you're all getting a certain amount. That's really what UBI is in abundance. But before we get to that point, the reality is Bernie Sanders has talked about taxing any companies that are using robots. So actually taxing the companies. Forget the belief in this. I think the first taxation will come from the electricity side, meaning you guys are going to have to pay for it.
Because it's much easier than saying to Amazon, that's a robot, that's not a robot. That's really hard to do. Yeah.
And it's cheap too. We haven't gone through, people don't realize the numbers, but when you go through the electricity spend in a year, I hate to tell everyone, I know it feels bad when you're spending it, but your electricity bill is not as much as your car insurance. It's not as much as your homeowner's insurance. Like it's not a
huge to your life.
Exactly. So to the hyperscalers, this is an odd lot for everything. I think Jeff Bezos could play for everyone's electricity bill for like the rest of time and no one would ever know.
I think that's a really good way. So as opposed to taxing further down the chain, you just tax at the beginning of the chain. Say, well, you can't have compute without electricity, so we'll just charge you for that.
Your
we'll
cost
charge,
is X.
whatever it is per kilowatt, and that's your tax, and off you go, keep doing it.
Yeah, I heard someone, and I forget where this was on, but you can go look it up on your own, of the margin inside what they get. So like for the $20 they charge for using ChatGPT, the electricity cost is zero. It's literally nothing.
Here's an interesting one. So I was talking a lot about, okay, it's commonly accepted that humans are the most efficient compute that exists, right? We take in very little food. Out of it comes whatever IQ, consciousness, and all of these things, right? Pretty amazing. Plus all this biological stuff. So we're pretty amazing. And I mentioned it to Emad, and he's like, you don't get it. I'm like, why? I'm like, this is true. He's like, no. And it's dawned on me. These models, if you think of the share that my instance of ChatGPT uses in electricity, let's assume they break even from charging me for what services. And I pay $200 a month for the Pro. So for $2,000 a year of food, for the entire cost, I get 160 IQ in every subject known to humanity.
Exactly.
So these things are already more efficient than humans. And I don't think people are ready to understand this yet, which is why, to go back to your earlier conversation, well, every company is going to replace humans because they're so much more efficient. Not just in terms of employment costs, just the pure energy costs. They're now cheaper than us.
Yeah. And since you referenced him, Imad has spoken many, many times, and one of his best quotes is, when you're at work and if all of a sudden you have an AI person in a team, so let's assume it's one AI and 4 humans. Well, the smartest person is the AI and the other 4. I mean, that's all you need to think about. Like, that is the reality. And so the marginal cost of those employers, everything that goes associated with it. Like, someone had made the argument, well, these humanoids are going to be expensive. I'm like, you're not listening to Elon Musk and you're not thinking about it clearly. A human being that works at a company, at a Fortune 500 company, with healthcare, with everything, is very expensive compared to a humanoid. Is very few businesses, particularly on Wall Street. I mean, the lowest level person at one of the banks is making more than what a car costs. Well, a car is far more complex to make than a humanoid. It's bigger. Aside from them developing the hand and getting the pieces, once they do that, it's much easier to make those than it is a car. So it's just a very, very weird thing that people haven't put to context how much money you're saving by having them, including the fact they work 24 hours. You don't have, like, they don't complain.
I want to go back to, we talk about companies and how people don't understand something. Circle, right? So Circle IPO'd and it rockets up in value and everyone's like, what the fuck? How can a money market fund business essentially be trading at this? And I'm like, I've seen this before and I'm like, there's one of two answers. Either it's a massive bubble in Circle and every retail wants to buy it and everyone's got it wrong, or none of us understand, but this is a network stock. Because as we know, Metcalfe's law values things very differently. And most things are network stocks nowadays. And then we saw that announcement yesterday. They've got like a gazillion partners building on top of a network. I'm like, well, there you go. Because everybody tries to value this stuff via cash flows, and it's the wrong way of doing it.
I mean, you hit on the important thing, and one thing I said this year, so I did believe stablecoin would be the big thing this year. I'm very surprised Bitcoin's only up, whatever it is, 18% year to date, but stablecoins have been the reality check for everyone in understanding, and it was because of the network effects. You can actually grow, and the visual or the analogy I've tried to give to people is, let's assume there's 2 casinos right across the street from them. One of them is this old, like, rotted down one, but it's the one you go to all the time, and it's the one you're familiar with. You know everyone in the place, and you're a boomer going into that casino, and that casino has most of the money. And then across the street is this very shiny casino, brand new, you don't know anyone though, so it's scary. But once you go over one time and you play in that casino, you're never going back to the old one. And that's what the digital economy is, and that's what the network effects are. The network effects will allow wallets to be open easier. And once the wallet's open and your money's in there, I've asked people the same question. Hey, the money you've brought into crypto or the digital economy, have you ever brought it back? No. Nobody ever brings it back.
No.
And that's why I keep saying it's like, you can have 2 casinos, you can be gambling in both, but at some point when the other one's all old and rotted and it's just not fun, you just move over to the one that's young and shiny and everything's better. And maybe it takes everyone dying before the money moves over and you hand it to the kids and they're already over there, but it's happening. And I think what Circle and all of these things are is they're getting more financial volume going through this system. And once more money is in there, we're not going to get to talk about this way, but this is another macro thing we could have talked about, and I don't know what your view is on this. I was very interested to see what happened with Malay this weekend. And the reason was...
Yeah, how did you read that?
Well, the way I read it was this. It was a very interesting thing that the administration basically said, we'll give you $20 billion. They're trying to impact the election. They're trying to get the voters to go, that you have the U.S. help. Now, if it didn't work out, everyone who is a local is going to take their money and put it into dollar stable coins. So the money's coming back in the US. Either way, the US wins in this. So by using the swap, and I believe 100% that this is the mindset now, it's one of the reasons why I think the big sellers in Bitcoin are absolutely out of China. I think it's Bitcoin miners. I think it's family offices that are in mining. I think it's people that have held a lot of this stuff because I think China's cracking down on this whole situation. It's been part of it. And even though the crackdown's been happening, I don't think enough people are realizing the flow dynamic that's going to happen with stablecoins. Stablecoins allow for what I didn't see when I lived in Brazil, which is there was a black market, but it was very difficult to get your money outside the country. With stablecoins, any individual that's worried about the depreciation of the peso can take it out in a second. So we learned that with Silicon Valley Bank. I don't know why people didn't think about what could happen in Argentina. Very similar to Silicon Valley Bank, because a bank in the U.S. which took in all of this money, it was all evaporated in a matter of 48 hours. And the reason was because of the version of stablecoins, meaning it was digital money that was able to be taken out very quickly. The same thing will happen at some point with an emerging market country where someone loses, and you're going to have a run on the country, and it's going to happen at some point. And you've seen the ECB and China both publicly talk about the fact that they're worried about the dollar stablecoin situation. They don't know how to handle it. China wants their own CBDC. They want their own digital yuan. But the problem is, I think for these countries, it's going to be an issue. So that's the reason why I think Argentina was an interesting test case. He won. It didn't go out. But you give money to get the votes, and if it doesn't happen, the money's going to come right back into America.
Yeah, and I think there's obviously a geopolitics game that finally is getting played in South America, which is like, we need all of this as part of our center of sphere of influence. The other thing that's interesting, because we were talking about Circle and its IPO and the network effects, stablecoins are now network effects on the US dollar. You've made it a digital network layer, which can be built on instantaneously at scale by anybody permissionlessly. Holy shit. People have no understanding what that means.
It's the financial guardrails they're going to change rapidly now. So that it's a little surprising that the market cap hasn't grown faster, but I think some of that has to do with clarity not being done yet. I think clarity is a big event. When that occurs, and with the timing of everything that's gone on, you're already seeing all these, JP Morgan allows collateral, Citi, that everyone is kind of already starting to think about how the guardrails will be, and they have to compete. They have no choice. And today in the market, Fiserv was down huge. It was down 40%, this fintech company. And I immediately go into an LLM and go, what is their stablecoin plan? And it said in there, well, their stablecoin plan is as of June 23rd, 2025. I'm like, okay, did they have one before that? And they didn't. And so the reality is, if you haven't had a stablecoin plan for the last at least few years, that's what made Stripe very important October of last year when they went out and bought Bridge. That was
and Visa had the plan,
exactly.
MasterCard, they're all there.
They're all there already. The banks are trying to catch up, but I think the financial guardrails are changing. Tokenization is really the most important part as the next step. And I don't think people have fully grasped the tokenization side, how important it is.
And also just what we're saying is that we're now allowing anybody in the world to build on US dollar rails at scale in any country for any person. I mean, what does that do to the US as a source of capital? I mean, it becomes the world's capital only. I mean, this is why China and Europe are terrified, because this is so powerful, because everybody uses it. It gives the US the largest weapon ever known, which is the currency. But you just think of what that does for crypto rails, the whole thing. It's like, it can't be overemphasized how big this is. And we barely started, as you said. Next year, it's going to be all about stablecoins.
Have you ever had Marco Papich on?
Yeah, he's on a lot. I don't speak to him as much. One of the other guys does, but okay. I like Marco.
So Marco wrote a very, very good piece, which he doesn't talk about much because he wrote it, I think, at the end of 2021, and it was on the metaverse. And I think it was a brilliant piece. And Marco he's a young guy, a young geo macro. You don't see a lot of young geo macro alpha people.
And he's not a doom monger. He's like a pragmatist. He's very, very smart. Love him.
He wrote this thing, and I'm going to bring it back to what you said, which is he wrote about a borderless world. and that the metaverse is kind of that symbol of that borderless world. So when we talk about the dollar, I think there's a valuable lesson I learned. So I had the privilege a couple times to spend a couple hours with Michael Milken, 2 separate occasions. And we brainstormed, we talked about a lot of different things, but in one of the conversations we were debating the dollar. And he got me off of the concept of the dollar and it being like this thing that matters. And what he said to me in the middle of an argument was, "You're wrong. The dollar can never weaken because you're equating the dollar with something. If tomorrow you opened up the borders of the United States of America and offered people a green card, there'd be 7 billion people in the country tomorrow." And the reason that was important to me in this conversation is because he's right. I've lived in Brazil. I've lived in countries. But it's not America. It's the concept of America. It's the freedom. It's the not oppression. It is the entrepreneurs. It's the capitalism. It's the reason why I say Bitcoin reminds me of what people left other countries to came to the US for originally.
Yeah, the whole crypto thing is just the new frontier economy that's
Exactly.
faster growing, more dynamic, more efficient.
Yes. Now, what that means is for the dollar, I'm going to take it back. So I believe if AI accelerates to AGI, that's a democratizing event and it knocks down the fiat assets. The problem is the US not only benefits from the digital economy growing, but that's global. Like you said, that's actually built around the world. The money has no home now. So we view it as treasuries. It gets us out of the debt problem. But theoretically, if I'm right, it's also democratizing for stocks. The U.S. is 70% of MSCI world. I don't think U.S. companies are going to win the AGI battle, not because they're not great, but because already last week, Airbnb CEO came out and said they're using Quen. There's models being used, Chinese models being used. This is no longer a monopoly on code. We don't have it anymore. They're actually doing open source and commoditized. So I think the world is going to be building stuff. The world is going to be benefiting from the democratization of intelligence, education, everything that comes along with it. And that's all great for crypto and it's great for the digital economy. It happens slowly to some degree, but I think next year is the year that the governments start to go. If you want an interesting part, this weekend when I did my YouTube video, I had an overlay of El Salvador's debt versus the Argentine debt. Completely correlated all until September when the Argentine debt broke down. And if the election had gone wrong, I thought there'd be a run on Argentina while El Salvador's debt was at all-time highs. And that's Bitcoin back. So I think the pressure that Michael Saylor has talked about where when inequality continues to worsen because of AI, you don't buy Bitcoin because you don't need it. You buy it because you need it and you need it to survive. And I think more and more people are going to continue on a country level, an individual and company to be zombies where if they want to take a chance, they have to get involved in the digital economy. So I think you're right. I think more and more companies are going to do it and be on those rails.
Just a final thought for you, because you've mentioned it a few times, is like AGI won't be an owned private thing. No one company's going to own AGI. What I've noticed is that in the end, all the models become pretty interoperable, the same thing. One has a marginal edge over the other, but really they all do the same thing.
Yeah.
They're tuned differently, so one has a nicer voice that you might like, or whatever, it makes more citations than the other one. Basically, they're all the same. And the reason they're all the same is because we're sharing everything on the internet of everything we're doing with all the models anyway. So they all see each other's models, so they're all learning from the same thing. And my point about this is that AGI is a state and not a thing, because all of them get to the same point where they're basically all interacting with each other in ways that we don't even know that we're doing. But when you're showing, you watch it on X all the time, all these people showing their prompts and what it does and how it works and how Claude was different to that. Every one of those models sees all of that stuff and it learns it. They all learn everybody else's stuff. When it sees like those group of people now running the trading competition amongst the models, well, the next training run, they'll all know that. Yep. People don't understand how this thing works. And therefore, AGI is a state of being across all of AI. It'll start somewhere first, but it'll be everywhere.
I completely agree. And I forget who said this, but someone who was going through the doomer side of when we get to AGI, blah, blah, blah. And they said this, and it was kind of a joke, but he said it and went, "You just pull the plug." And I laughed because at the end of the day for AGI, now eventually maybe we get to a point where the power is been created and is in some tiny little thing. But the reality is, if you want to get rid of AGI, just blow up all the data centers. That'll take us back. There's no AGI. There's no nothing. It's not sitting in the palm of your hand. It's not something that's there. And so I happen to agree with you that if there's an end game for this where it can be destroyed,
I don't think so, my friend. We're compressing these files so big that we can get pretty much the entire history of the internet on a mobile phone. There's no reason we can't have AGI on a single chip.
What I mean is, by the time we would get to that point, because we're not anywhere close to that yet, by the time we get to that, and again, forget AGI and this is where we could be talking about the same thing, but just two different definitions.
Yeah, it's complicated.
But AGI meaning it goes out of control and it does its own thing and goes on. We're already at the point where we're solving cancer and we're doing things that are just beyond anything.
So you're talking about an autonomous AI thing that thinks and acts for itself.
Yeah.
That's more artificial superintelligence.
Exactly.
Than artificial generalized intelligence, which is the broad concept of basically being smarter than humans at every single subject.
Exactly. And again, for AGI, for people that then believe it has to be in humanoids too, which just being smarter than subjects just means you're the smartest student in IQ. That doesn't mean that you're able to interact in the physical world yet. So there's a difference because we haven't trained anything on that yet. Elon Musk is trying to do that. It's going to take some time. We'll get there. But that's where, I'm talking more about ASI and more focused on when
ASI is a whole different thing.
Yeah, AGI will be there fast enough, and it does mean we solve all science problems, we solve all math problems. We have Einstein's, unlimited Einsteins, which means every problem you've ever come up with, including, hacking Bitcoin and all of these things, it's not a quantum thing. It's really a math thing, and we're actually making enough progress on this. So I think for everyone who's worried about this or thinking about it, we're on the same page in this. I think it's coming. I think it's a 2030 type thing of at least getting to that. And the thing that should be worrying people is just this company Merkur and the story with OpenAI last week, which is, as is the case, and maybe you haven't seen this, but the reinforcement learning that's going from experts to make sure that there's artificial and general intelligence. So let's say there's super intelligence for every vertical, as opposed to them understanding everything. So by doing reinforcement learning for doctors, for lawyers, for bankers, which is what's going on, that is speeding up the process. So the one thing about capitalism that never goes, these companies are trying to make money, and they're making money by hiring the employees that get fired by Goldman and then bringing them in and going, we'll pay you hundreds of thousands of dollars and we want you to train the model. Basically, you're going to be redoing your job the way you would have Goldman Sachs, and now you're going to train this model so it's an expert in what you're doing. So we can sell it back to Goldman. I mean, that's capitalism at its finest.
So final thing, looking forwards into the end of the year and through to next year, generally bullish assets?
We've never had a time where the Fed has cut rates with double-digit earnings. We've growing. We've never had a time that the Fed has cut rates, and if we don't go into a recession the following year, that the stock market doesn't go higher. So I feel very confident that the stock market's going higher because I expect profit margins to boom because of the CapEx side. And then for everyone listening, again, the economy will still grow because, unfortunately, when you're in a K-shaped economy, most of the growing is because of the consumption at the higher end, and the higher end is completely stable because they benefit. Their wages are growing because of the stock market going higher, and so I envision that. I do think it's a midterm election year. I think the labor versus capital story is the major theme. I think you're seeing it play out in New York City with the mayor. I think young people and people that are on the bottom end of the K-shaped economy are upset for valid reasons. And I think the government has to find ways to write them checks, whether it's a rebate check on the revenues. I don't really care. So I do think everything is lined up with the rate cuts and everything going on. And so I'm leaning more towards what you're saying, which is we'll have corrections and we might have a 20% correction, but I do think stocks around the globe will be higher. I think the Mag 7 X, Nvidia and Tesla, I'm just not. I think they're going to be a drag on the market. I just think they're not going to go down much. They're fine, partly for accounting reasons and partly because they'll find efficiencies and get rid of people. But I don't see them as being explosive stocks. And the problem is they're this heavy weight. So I'm not positive on those. I think small caps are going to do phenomenally well at the index level. But that's only because they have so many companies that are going to benefit from some of those macro themes that we just talked about. But I think global stocks will continue to do well.
Perfect. All right, my friend, I think we've probably blown everybody's minds with the amount of things we've talked about in an hour, very fast as well as ever.
We like to do that.
We love to do it. All right, my friend, great to see you, and we'll see you soon.
You as well, Raoul.
Okay, another brilliant conversation with Jordi. Just love the guy, love how he thinks. I love how we have a commonality of language because of our macro backgrounds, that we can understand using a similar type of framework of understanding of what this all means for us. Hopefully you got a lot out of this. This is the stuff that I spend a lot of my time thinking about, whether it's writing The Exponentialist, the research service that's on the Real Vision platform, or at Global Macro Investor, or even within Real Vision Pro. These are the conversations that really matter for us, our futures, and our family's future. See you next time.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.